Hi, this is John Kingston from JR Trading Zone. Glad to meet you all in this video, and the subject of today's video is about candlesticks. Already I have made a video about the secret of candlesticks. It is purely for intraday traders. Okay. Now in this video, if you are a swing trader, not a long-term investor, not a trader, if you are a swing trader, this video is for you. Okay. Then what is swing trading actually? If you buy a stock and hold it for few days or few weeks and then you sell it when you get appropriate profit, that is called swing trading. Based on your analysis of support and resistance, you are entering a position or taking a position in a stock or index and just holding it for few days or few weeks, and you will sell or square off the position. This is called swing trading. This candlestick I am going to teach is only for swing traders. If you are a long-term investor, in my term, a long-term investment means investing for 5 years, 10 years or more than 10 years is called long-term investment. For a long-term investment, this video will not be useful, because a long-term investor should invest in a stock based on its fundamentals. Okay, you don't want to know what the technical side is. You should give more importance to the fundamentals of the company. In the long run, it will work. Okay, but when coming to swing trading, just you are buying the stock, holding it for few days, few weeks, you are getting 10% or 15% or 20%, whichever the target is, you will be selling it. You will have a strict stop loss. If it is not working or not going in your side, you will be squaring off the position. For this type of traders, the regular candlestick will create some confusions. This is what I am going to say in this video. For an intraday trader, there is no doubt you should only use standard candlesticks with wicks on the upper and lower side. That is called standard candlesticks. I have made a clear video on the secret of candlesticks, and it is purely for intraday. If you didn't watch the video, if you are a trader, go and watch the video. I will be giving it in the link above. Okay. Then now if you are an swing trader, you can watch this video. This video will be very helpful for you. Okay. In the normal standard candlesticks, if you are taking a swing trade and if you are keeping a target, it will create some confusion and you may square off or sell even before the trend is not over. Actually, you are buying at a level and you are actually expecting it to reach a level, but in between it will create some confusions for you and you will think that the stock is going to reverse and you will square off the position. Okay, but if you use this candlestick, which I am going to teach in this video, you will have no confusion about what is going to happen and you can get the entire trend. Okay, you can get the entire swing. This is the advantage of this candlestick. Okay, the name of the candlestick is Henkanashi candlestick actually. Why an intraday trader cannot use this candle? This candle does not show the real-time value. If one candle is formed, the candle also takes the average price of the candle which is formed even before that candle. Each and every candle formation is formed from the value taken from the previous candle. So it does not show the real present value. But using Henkanashi, we can find the trend. We can capture the trend. Okay, that's why for swing traders, Henkanashi candle is very important. And I will also show how the normal candlestick is different from Henkanashi and why should we use Henkanashi in swing trades. Okay, this video is not for long-term investors and not for traders. This is for swing traders. Okay, holding a stock for few days, few months, squaring off the position and getting the profit. This is called swing trades. If you are a swing trader, you can watch this video. This will be very helpful and useful for you. Okay, let's go to the computer presentation and see how Henkanashi candle is different from the normal standard candlestick and how it is useful for a swing trader. Yeah, fine. Let's start our presentation now. Just let's start with any random stock. Let me select. I like Tata companies very well. Okay, let's start with the TCS. Okay, TCS. Okay. One thing more I want to say is a disclaimer that I am not a SEBI registered analyst. We are just taking this for educational purpose. Okay. You can try it in different stocks which you are trading. So this is purely for education purpose and this is not a stock recommendation. Okay, please keep in your mind. Let's take the 1 day candle. I think you remember my video simple powerful indicator where I have clearly explained how to draw support and resistance. If you have not watched the video, I will be giving the I button or the end screen. Go and watch the video also. Now based on our analysis of support and resistance, now we are entering a trade. Here you see this is a pure support, this is also a pure support. Okay, this is a support, it is coming to the same support level. At this level again we are trying to enter into a long trade. Long trade means we are going to buy it. Okay, and we are fixing a target of the on the resistance side. Here we are entering the trade in this candle and we will be keeping a target up to this position where the previous resistance is there. Okay, very clear. No, I think everyone must be clear with this, no doubt. Okay, now this is the standard candlesticks. If you enter here, you will be watching daily, you are watching here, you see red candle which may create a confusion and you will think sometimes it may go down. Again you see here a lot of red candles creating as a lot of noise. You know, there are a lot of noise in this area which tends us to square off our position, or we will think that the stock might reverse from this position. There is a lot of possibilities here to reverse, make another short top here. This is on top. Sometimes it may create a top here and it can go like this. There are a lot of possibilities like that. Okay, therefore it is actually a noisy candle. This candlestick is called a noisy candle. This is only for intraday traders where we use 5-minute time frame, and this shows the real time data. If it is now TCS is 3211, you see here 3200, this is the actual price, closing price of the TCS. See, when you come to the candlesticks here, you can find a lot of candles here, bar candles. This is normal candles which we use. This is hollow candles, columns, line, area, baseline, high low, Henkanashi, Renko, line breaking, Kagi, different type of candles, and they mostly people use it for different trading styles. Now we are here and we are selecting the candle Henkanashi. That is this candle. You see this candle which I am going to explain in detail. Okay, now we have selected this candle and we are going to apply the Henkanashi candle and going to find difference between the what we say the normal candlestick and the Henkanashi candle. Now you see here in this point you are taking the trade. Here, even though if you are seeing a red candle here, you can see more clarity in this chart. You see here you can see more clarity. I will switch on to the normal candlesticks. You see the difference between the normal candlesticks and Henkanashi candlesticks. when we are talking about the Henkanashi candlesticks, I can explain the formulas like that because I am not comfortable with explaining the formulas because I don't remember these formulas. I just go behind the logic. By hearting the formulas and explaining the formulas is a risky task, and I don't go behind formulas. You just keep in mind this Henkanashi candle, for each and every Henkanashi candle, if you are taking this candle into consideration, this value is derived from this candle also. The previous candle is also a part of the next candle, okay, in Henkanashi candle. But when coming to normal candlesticks is independent candle. It does not take the value. If this is a candle, this is a real-time data. It does not take any value from the previous candle. Okay, therefore you should be clear. You should clear the difference between the Henkanashi and the normal candlesticks. Actually, this is the difference. Knowing the formulas will not help you. You just go behind the logic. Therefore, an intraday trader can't use this Henkanashi candle because it won't give you the real-time value. You see, this is a close 3253 in Henkanashi, but when you are coming to normal candlesticks, this close is 3211. You see, so the value is always not perfect when you are coming to Henkanashi candle, but you can see a clear trend here. You can see a clear trend reversal also. Here you have a formula. You see, if you are seeing on the wicks on the upside for the green candle, then it is called a bullish candle. In Henkanashi candle, in this candlestick, if a green candle wicks on the upper side, then that candle is considered as a bullish candle. If you see a red candle with wicks on the lower side, then this candle is considered as a bearish candle. Now, where can we change our position? If you are entering in this point and going long, where can you change your decision? You should wait for a doji. The color is not important. You should wait for a doji. You see, here you can't find, here you can find a doji in this place. I'll show it clearly. You see, in this place you are able to find a doji. Doji means there is a possibility of reversal. If it is going up, there is a possibility of reversal on the downside. If it is going downside, there is a possibility of reversal on the upside. So this candle we have to watch for. This is all our day candles. Each and every candle is representing one day, one particular. Here you should wait for the confirmation, but the next day it is again the bullish candle. So you are not ready to square off your position, and again you see bullish candle again and again repeatedly. Here again the doji is coming and you should wait for the confirmation. Here in this particular place you are getting a confirmation of bearish sign. You see 1 2 3 4, the 4 dojis are created here and you are waiting for confirmation. Before getting confirmation, you are not supposed to square off your position. Okay, definitely you are getting a confirmation here, and from the confirmation point the stock is moving downwards. You see here it's making a small swing and then again it is coming down again. You see, where can we enter? Based on our studies on support and resistance, we are supposed to enter here because we are waiting here for some bullish sign. But we are not getting bullish sign at this point. But here you are getting a doji, small dojis, and just you are getting a confirmation candle. This is the confirmation candle. This green candle is the confirmation candle where you can enter. You can keep the stop loss here at this area. At this area, you have. Actually, I will say each and every swing trader should keep a stop loss, or you should be able to average it properly. Okay, even if you are averaging, you should have a system in there. How to average it? First, if you buy 50 stocks, then 50, then 50, then 50, like that, you must have a system of averaging, and up to how much you have to average, there also you must have a calculation. Okay, keeping on averaging a stock I don't recommend, because a stock can go anywhere up to any point and it can rise, so you will lose your chance of entering into different trades. If your money is blocked, your capital is blocked, definitely if you are investing in quality stocks like TCS and blue chip stocks, you don't be afraid. Today or tomorrow it will surely reward you. There no problem. But if you are a swing trader, you are not supposed to do trades like that. You will be holding just a stock for just few weeks, few months, squaring off your position, then going entering new stocks, entering new positions, searching for different opportunities. That's the mindset of a swing trader. Also, if you are a swing trader now, at this point you are getting a beautiful chance of entry, and if your entry, where will you keep your target? Definitely on the next resistance here. But in between this, if you are using the normal candlesticks, you see what a noise here, everywhere there are big red candles, gaps, a lot of noise is created here, and it might try, or it might make you to your mind to square off your position, and you might think that there may be some reversal like that. But in Hankanashi, when using Hankanashi, you are clear. You see, even if there is a doji here, this confirmation is positive and you are riding. Here if it is a doji, confirmation is positive, again you are riding. Here you are getting a small doji, confirmation is positive, again you are riding. You see completely. Here again, these are doji, positive candle, you are riding. Here there is a doji and negative confirmation. At this point you are only getting a negative confirmation. You see, here also you are getting a small negative confirmation. Here you can square off your position. This is a doji, this is a negative confirmation. Here also one means you can square off your position. Okay, here you are getting a doji, this is negative confirmation. Okay, here also you can square off your position. You have took your position here, you are squaring off position here. You bought around 2,979, you are squaring off your position around 3,345. This is what a swing trader do, and this candle is very helpful for a swing trader. I think I have clearly explained the difference between this candlesticks, normal candlesticks, and the Hankanashi. Okay friends, I think you must be clear with this video. If you are not clear, again and again repeatedly watch the video, and you try. I think I want everyone to draw support and resistance in your stocks where you have invested, where you are taking swing trades. Draw support and resistance, and try to apply this Hankanashi candle. This will work very well for a swing trader. Each and every swing trader, according to me, should apply Hankanashi candle. This is a very beautiful candle for swing traders, and I think I have explained the difference of both the Hankanashi and the normal candlesticks, and I think everyone might try this in your trading style. You can use it in your trading style. This is how the professional swing traders use this Hankanashi. Okay, therefore we can say I most probably I don't use this Hankanashi because I am not a swing trader. I am pure intraday trader, and I only trade intraday positions. If it is so I don't use Hankanashi. But if you are a trader, if you are a swing trader, this will be very useful for you. And if you are interested in learning, some people might have some interest. Okay, if you are passionate about stock market, if you are a trader, normal trader, this Hankanashi is not useful for you, and watching this video is also useless. But if you are passionate about the market, you want to learn all small terms about the market, you want to know everything about the stock market, then definitely this is a valuable video for you. I know, and I have made a good presentation, I think. Okay, let's come to the conclusion. Yes friends, I think I have clearly explained the difference between the standard candlesticks and the Hankanashi candlesticks. This candlestick can't be followed by long-term investors and traders. Okay, for both of these type of traders it won't be useful. For long-term investors also this is not useful actually, I will say. And for the traders, it will never be useful because it is not giving the real-time data actually. So if you are a swing trader holding the stocks for few days, few weeks, and if you are buying it in support and trying to sell it in resistance, holding just for few days or few weeks, it will be very useful for you. It will avoid the confusions which are made by the normal candlesticks, because normal candlesticks actually is very noisy, and it may try to square off our position even before we are reaching the proper target. So all the confusions can be cleared by using this candle, and it is a useful video for the swing traders. If you are a swing trader holding the stock for few days, few weeks, then try this candle. It will be very useful for you. And this is John Kingston signing off from JR Trading Zone. Bye.